Hi, my name is Kumar Shah. I'm a managing director at Transit Capital. We're a growth stage cross-border venture capital firm. So I think the whole idea was that there is clearly interest in from foreign investors to invest in India, and there is a pool of capital that's opened up for Indian companies outside of India. Right. So today, thanks to the internet, companies are now acquiring customers abroad, and we are also seeing that there is large amount of investor capital also available abroad. Uh, I think that investor capital is important uh, from other markets because those investors can help Indian companies navigate that foreign market as well. And we are seeing that already. So we are seeing hedge funds that are from China, hedge funds from the US that are investing in Indian companies. We're seeing corporate VCs from various markets investing in Indian companies. And we're seeing large family offices also coming in. So I think it depends is the answer. Is if your business needs intimate knowledge of the Indian market, then there is a significant amount of education that's required. Uh, Broadly, today, most people understand the fintech opportunity that's there in India, the education opportunity that's there, the healthcare opportunity that's there. You know, a year and a half, 2 years ago, most people didn't know what Geo was doing to the Indian market, right? So, if you told people that, look, India is going to have 500 million people because of Geo, the first thing I would have to explain to investors abroad is what is Geo and why it's going to have such a big impact. Today, I think most people know the kind of impact that Geo has had, the kind of impact that UPI has had in the market. So, I think if your business touches on any one of those themes, it's fairly well understood, and you don't really have to educate investors abroad. But there might be cases where you may have to educate them specifically to something that is unique to your market. So I think the real question is, where is your investors' money coming from, and what is the objective of actually setting up those entities abroad? Some of the things that we discussed in our session was also there are certain regulations that or certain restrictions that prevent companies from you know running operations smoothly in India. Suppose so, for example, if you get an acquisition offer from a foreign player which is performance based, upfront fee and then a follow on fee, that actually is very difficult to structure with an Indian entity, right? Easier to structure if you're a Singapore entity or a US entity. So that's one of the reasons why you may want to set it up abroad. The other example we had was if your entire customer base is in the US, founding team's going to move to the US to start looking for customers there, then it may make sense to actually set up in the US because a lot of your capital may be coming from US investors, and US investors obviously understand Delaware jurisdiction much better than Singapore.